Disney having a dismal day today. Barclays downgrading the stock to equal weight from sec to perform, citing a significant growth slowdown in its Disney Plus streaming service. Disney also announcing delayed releases for a number of upcoming films, including the 5th Indiana Jones movie, Black Panther 2 and Thor Love and Thunder. Shares of Disney lower by 3% or so, just over 3% as we stand. Mike, likely that investors are reacting more to the comments about Disney Plus growth than the film delays. But the question is, can it keep up that pace? Overall, it's been a huge positive for them in the last couple of years.
It was a huge positive. I do think it really got full credit, though, for having almost, won and becoming, on par with Netflix in terms of valuation. It was almost as if the market all at once valued what Disney Plus was going to become at a Netflix multiple. So it's been wearing down that premium for a while right now, and I think that's part of the same process. There's also billions of dollars of operating income missing from the parks. Okay, they are breaking even on the parks right now. So yeah, reopening is a different part of that story. But the idea that they're going to maybe have a struggle in getting to their own sub goals, I think is, it's working its way into the stock. Down in the low 160s was the January low for the stock. So I think until you're breaking that, it's still just kind of sideways and trying to, rationalize the valuation.
I don't know. If my 3-year-old was a Disney Plus subscriber, as he is, there would be no slowdown.
He's a power user, though, right?
Power user. Doug Cass, the investor writing about Disney, he shorted it last week, which was a timely call, Lindsay, and warned of some execution issues in streaming, legacy television, movies, cruises, and theme parks in an unsteady and uncertain macroeconomic environment. Is Disney a buy or a sell?
Well, look, you saw the downgrade today, and I think one thing that caught my eye was really they were talking as if the streaming business was dead, like they weren't going to add any subs at all. Yes, streaming is slowing down, and I think that you've seen that reflected in the price of the stock and in the multiple as it's come down on a year-to-date basis. Look, this is a stock that's underperformed the S&P 500 year-to-date. It's down about 3%. The S&P is up 19%. And to Mike's point, the positive catalyst, there could be upside surprise in the park business as the reopening trade continues to evolve. The nice thing about Disney is this has both reopening tendencies and work from home tendencies with the streaming services. I do think they need to pick up their content, but to the extent they're able to do that, they've got some really great talent to create better content. And if the parks reopen or if the parks gain more volume and prices continue to go up, and then you get a little bit of box office to support it here, you never know what can happen. By the way, I own this share, so I'll leave it there.